Part 1, The Unbiblical Truth About Idle Money. Welcome to The Word on Wealth, where we uncover timeless biblical principles for modern financial flourishing. Today, we're diving into a truth that might challenge a very common, yet often unbiblical, assumption many of us hold about our money. Most people, perhaps including yourself, believe that money sitting in a savings account or under a mattress is safe. It's there, it's accounted for, and it feels secure. We tend to view our bank accounts as fortresses, protecting our hard-earned cash from the uncertainties of the world. But I'm here to tell you that this belief, while understandable, is fundamentally flawed and, from a biblical perspective, counterproductive. The unbiblical truth about idle money is this: it is not safe, it is shrinking. While your nominal balance may remain the same, its purchasing power is constantly being eroded by inflation. Think of it this way: what $1,000 could buy you 10 years ago is significantly more than what it can buy you today. That safe money sitting stagnant is silently losing value, diminishing its capacity to provide for your future needs or to be a blessing to others. This slow, silent erosion of wealth goes directly against God's intention for the resources He entrusts to us. The biblical perspective is clear: God intends for resources to be multiplied, not left idle. This truth is powerfully illustrated in the parable of the talents found in Matthew chapter 25, verses 14 through 30. In this parable, a master entrusts different sums of money, talents, to 3 servants before going on a journey. 2 servants diligently invest their talents, doubling their master's money. They are commended with the words, "Well done, good and faithful servant. You have been faithful with a few things, I will put you in charge of many things. Come and share your master's happiness." However, the 3rd servant, out of fear, simply buries his talent in the ground. When the master returns, he harshly rebukes this servant, calling him wicked and lazy, and takes away even the single talent he had. The master concludes by saying, "For whoever has will be given more, and they will have an abundance. Whoever does not have, even what they have will be taken from them." This parable is not merely a story about financial management, it is a profound teaching on stewardship and God's expectation for the resources He entrusts to us. It emphasizes that unproductive wealth goes against principles of diligence and efficient stewardship. Just as a farmer plants a seed for it to grow and yield a harvest, God intends for our financial seeds to be planted, invested, and multiplied, not locked away where they cannot bear fruit. An idle seed eventually withers and loses its viability. Similarly, idle money loses its potential to bless. Proverbs chapter 21, verse 5, reinforces this: "The plans of the diligent lead to profit as surely as haste leads to poverty." Diligence in stewardship includes putting our money to work. Therefore, whether your money is a small amount or a large sum, the principle remains the same: even small, consistent returns honor God more than inactivity. It's about being a faithful steward, actively seeking opportunities for multiplication and growth, rather than passively allowing inflation to diminish your God-given resources. This isn't a call to reckless speculation, but to intentional, wise, and prayerful engagement with your finances, understanding that responsible growth is a form of worship and good stewardship. As we continue this series, we will explore practical, safe strategies to achieve this growth, ensuring your money is not just safe, but actively serving its divine purpose. Part 2, Financial Stewardship, Multiplying What God Entrusts. In our previous discussion, we challenged the common, yet unbiblical, notion that idle money is safe money, revealing how inflation silently erodes its value. We introduced the foundational truth that God intends for our resources to be multiplied, not left stagnant. Now, we delve deeper into what this truly means by defining financial stewardship, not merely as saving, but as actively managing and multiplying what God entrusts to us, ensuring its impact grows for His glory. Financial stewardship is far more comprehensive than simply putting money aside or avoiding debt. It encompasses our entire relationship with money and possessions, viewing them not as our own, but as resources entrusted to us by God for His purposes. To properly grasp this, we must revisit the powerful lesson of the parable of the talents in Matthew chapter 25, verses 14 through 30. As we recalled, the master expected his servants to proactively engage with the funds entrusted to them. The servants who invested and doubled their talents were commended, not just for returning the original amount, but for multiplying it. This parable highlights Jesus' clear expectation for proactive engagement. We are called to be diligent, strategic, and fruitful with the financial capital placed in our hands. The master wasn't looking for preservation alone, he was looking for profitable growth. The bedrock of this understanding is beautifully articulated in Psalm 24, verse 1, "The earth is the Lord's, and everything in it, the world, and all who live in it." This foundational truth reminds us that all money, all wealth, all possessions belong to God. We are merely caretakers, managers, stewards of His abundant resources. This perspective radically shifts our approach to finances. It moves us away from a sense of ownership, which can foster anxiety or greed, towards a sense of responsibility and accountability. Our goal, then, becomes to manage God's resources in a way that honors Him and expands His kingdom. How does this stewardship perspective influence our choices in savings, business, and investments? Firstly, it transforms saving from an act of hoarding into an act of strategic provision. We save not just for personal security, but to have resources available for future opportunities to give, invest, or respond to needs. Secondly, in business, it compels us to conduct our affairs with integrity, seeking not just profit, but also to provide valuable services, create ethical employment, and contribute positively to society. Our businesses become platforms for kingdom impact. Thirdly, and most pertinently to our discussion, it reshapes our approach to investments. We invest not with a get-rich-quick mentality, but with a desire to generate fruit from the seeds God has provided, growing the resources that can then be used for His glory. This means seeking out investments that are not only financially sound but also ethically aligned with biblical values. Furthermore, responsible stewardship also includes the wisdom of diversification. Ecclesiastes chapter 11, verse 2, advises us, "Divide your portion to 7, or even to 8, for you do not know what misfortune may occur on the earth." Solomon, despite his immense wealth and wisdom, understood the inherent risks of life and the importance of spreading one's resources across different ventures. This timeless principle of diversification is a cornerstone of prudent financial management, protecting us from undue risk and ensuring greater stability for the resources we are stewarding. It means not putting all our eggs in one basket, but thoughtfully distributing our investments to safeguard against the volatility of any single asset. By embracing this comprehensive view of financial stewardship, understanding that all belongs to God, that He expects multiplication, and that diversification is wise, we set the stage for exploring safe investment vehicles that allow us to honor Him, grow our resources, and effectively multiply what God has entrusted to us for His kingdom purposes. This is the essence of aligning our wealth with the Word. Part 3, Safe Havens, Where to Park Your Money to Grow. Having established the foundational principle that God intends for us to multiply what He entrusts, and that responsible stewardship includes a commitment to diversification, the natural next question arises: where do we begin to put these principles into practice, particularly when it comes to the cash we need to keep readily accessible, yet productive? One of the most common financial mistakes, often made innocently, is leaving significant sums of money in traditional low-interest savings accounts or checking accounts. While these accounts offer easy access and a sense of security, they are, in reality, silently diminishing your wealth. As we discussed, inflation is a persistent force, steadily eroding the purchasing power of every dollar over time. If your money is sitting in an account earning less than the current rate of inflation, you are effectively losing money each day. What feels safe and protected is, in fact, unconsciously losing its value, making it harder to fulfill its God-given purpose of provision and blessing. This brings us to a crucial aspect of wise financial planning, echoed in the words of Jesus himself in Luke chapter 14, verse 28, "Suppose one of you wants to build a tower. Won't you first sit down and estimate the cost to see if you have enough money to complete it?" This parable emphasizes the absolute necessity of careful planning and forethought in any significant endeavor, and financial management is certainly no exception. Just as one wouldn't start building without a blueprint and a budget, we should not manage our money without a clear strategy for its protection and growth. This biblical principle compels us to think intentionally about where we park our cash, ensuring it is both protected and actively earning. Our aim is to find safe havens that preserve capital while still offering a reasonable return, allowing our resources to work for us, even when they are awaiting a specific deployment. So, where can we find such a safe haven? A prime example, often overlooked by the average investor, is short-term US Treasury securities. These are debt instruments issued by the United States government to finance its operations. When you purchase a Treasury bond, bill, or note, you are essentially lending money to the US government. Their safety comes from the full faith and credit of the US government, meaning they are backed by the government's ability to tax and print money. Consequently, the default risk on US Treasuries, particularly short-term ones, is considered near zero. This makes them one of the safest investments globally, providing an exceptional degree of capital preservation. Unlike a bank account that might offer a fraction of a percent in interest, short-term treasuries typically offer yields that are competitive with, and often exceed, inflation. This allows your money to earn a modest, consistent return while remaining highly secure. They serve as an excellent holding zone for cash that you might need in the near future, for an emergency fund, a down payment, or a planned large expense, but don't want to leave vulnerable to inflation's bite in a low-yield savings account. Historically, accessing these government securities directly could be a bit cumbersome for the everyday person. However, modern financial tools have made this incredibly simple. One such tool is an exchange-traded fund, or ETF, that bundles these US Treasuries. An ETF is essentially a basket of securities, in this case, a collection of various short-term US Treasury bonds, bills, and notes, that trades like a stock on an exchange. By investing in a short-term Treasury ETF, you gain instant diversification across many government securities, professional management, and easy liquidity, meaning you can buy or sell your shares just like any stock during market hours. These ETFs typically pay out regular income, aligning perfectly with the concept of passive income from a truly safe source. This methodical, prudent approach to gathering wealth, little by little, finds resonance in Proverbs chapter 13, verse 11, which wisely states, "Dishonest money dwindles away, but whoever gathers money little by little makes it grow." While this proverb certainly speaks to ethical wealth acquisition, its latter half offers a profound principle for even legitimate earnings: patient, consistent, and wise accumulation. Parking your money in safe, interest-earning vehicles like short-term Treasury ETFs is precisely this, gathering wealth little by little. It's a diligent, low-risk strategy that honors God's call to multiply what He entrusts, without succumbing to the temptations of speculative ventures, ensuring your resources are both protected and productive. This is how we begin to build a financial foundation that aligns with His wisdom and purposes. Part 4, Demystifying T-Bills, your low-risk, high-flexibility deposit. In our exploration of safe havens for our financial resources, we've touched upon the general concept of US Treasury securities. Now, let's zoom in on a specific and highly effective component within that category: Treasury Bills, or T-Bills. Often perceived as complex and only for sophisticated investors, T-Bills are, in reality, a remarkably straightforward and powerful tool for the everyday steward looking to put their money to work without taking on undue risk. At their core, T-Bills are simply short-term loans you make to the US government. When you buy a T-Bill, you're essentially lending money to the government for a defined period, and in return, the government pays you interest. This concept of wise lending and borrowing is not new to biblical wisdom. Psalm 37, verse 21, for instance, tells us, "The wicked borrow and do not repay, but the righteous give generously." While this verse speaks to the morality of lending and repaying, the underlying principle is that financial transactions, including lending, are part of a righteous and ordered society. Investing in T-bills is participating in a trustworthy lending arrangement with the most creditworthy entity in the world, the United States government. What makes T-bills particularly attractive for the prudent steward are their unique features, primarily their short maturity periods. T-bills typically mature in a matter of weeks or months, commonly 4, 8, 13, 17, 26, or 52 weeks. This short-term nature provides immense liquidity and flexibility, aligning beautifully with the biblical understanding of seasons and the need for adaptability, as Ecclesiastes chapter 3, verse 1, reminds us, "There is a time for everything, and a season for every activity under the heavens." In financial stewardship, this means having access to your funds when unexpected needs or opportunities arise, without locking them away for years. You can continually roll over your T-bills into new ones at maturity, or you can retrieve your principal as needed. Another compelling feature, especially in our current economic climate, is how T-bill interest rates often respond to Federal Reserve actions. When the Federal Reserve raises interest rates to combat inflation, as they have done in recent times, T-bill yields tend to rise significantly. This means that at many points over the past year or two, T-bills have offered yields of 4% or even higher, far outstripping the meager returns of traditional savings accounts, which might offer a tenth or a quarter of that. This allows your parking money to not only keep pace with inflation but potentially even outpace it, fulfilling the mandate to multiply what God has entrusted to you. Despite sounding complex, T-bills are incredibly simple in practice, especially when accessed through an investment platform or a Treasury ETF, as we discussed. They are a safer, more flexible, and often higher-yielding alternative to traditional certificates of deposit, or CDs. While CDs lock your money away for a fixed term, often with penalties for early withdrawal, T-bills provide similar security and often better rates with far greater liquidity. Think of T-bills as a secure, government-backed deposit that actively works for you, ensuring that your wealth is protected, productive, and readily available for God's purposes. They are a cornerstone of wise financial planning, allowing us to be diligent stewards of every resource, ensuring that even our liquid cash is honorably serving its divine purpose. Part 5, ETFs to the rescue, simplifying smart investing. We've established the incredible utility of T-bills as a safe, flexible, and high-yielding place to park your cash. But for many, the idea of directly purchasing T-bills through the Treasury Direct website can still feel like a step into unfamiliar territory. This is where exchange-traded funds, or ETFs, truly come to the rescue, simplifying smart investing and making these powerful tools accessible to everyone. An ETF, as we briefly touched upon, is essentially a professionally managed basket of securities that trades on a stock exchange, much like an individual stock. In the context of our discussion, you can think of a T-bill ETF as a single investment product that holds a diverse collection of short-term US Treasury bills and sometimes other short-term government-backed securities. Instead of individually selecting and purchasing T-bills with different maturity dates, the ETF does all the heavy lifting for you. It automatically manages the portfolio, buying new T-bills as old ones mature, ensuring that the overall duration and risk profile of the fund remain consistent. One of the most appealing features of T-bill ETFs is their automatic reinvestment and dividend payout structure. As the T-bills within the fund mature and generate interest, that interest is collected by the ETF. Most T-bill ETFs then distribute this accumulated interest to their shareholders, typically as monthly dividends. This provides a consistent stream of passive income, which can either be taken as cash or automatically reinvested to purchase more shares of the ETF, further compounding your returns. This effortless system aligns perfectly with the wisdom of seeking tools and partnerships to multiply efforts efficiently. Ecclesiastes chapter 4, verse 9, reminds us, Two are better than one, because they have a good return for their labor. While this often refers to human partnership, it also speaks to the power of leveraging effective tools and systems to achieve greater outcomes than we could individually. Similarly, Proverbs chapter 14, verse 23 states, "All hard work brings a profit, but mere talk leads only to poverty." ETFs are a testament to how smart tools can make our hard work in financial stewardship more profitable and less laborious. Let me give you a concrete example. A widely recognized and easily accessible T-bill ETF is SGOV. SGOV, or the iShares 0 to 3 month Treasury bond ETF, specifically focuses on very short-term US Treasury bills. It's designed to provide capital preservation, liquidity, and income, mirroring precisely what we've been discussing. You can purchase SGOV or similar ETFs through any standard brokerage platform, the same way you would buy a share of a common stock. You simply search for the ticker symbol, SGOV, decide how many shares you want to buy, and place your order. The beauty of SGOV is its consistent monthly dividends, providing a predictable income stream that often far surpasses traditional savings account rates, all while maintaining the near-zero default risk of US Treasuries. Beyond simplicity, T-bill ETFs offer incredible liquidity and extremely low costs. Because they trade on an exchange, you can buy or sell shares throughout the trading day, giving you immediate access to your capital if needed, unlike the less flexible structure of a certificate of deposit. And the cost to own these funds is remarkably low. For SGOV, for instance, the annual expense ratio is often less than 0.1%. This means that for every $10,000 you invest, you might pay less than $10 a year in fees. This makes productive cash management accessible to everyone, regardless of the size of their portfolio, without the heavy lifting of direct T-bill purchases. By utilizing T-bill ETFs, you transform your idle cash into a productive asset, generating income and preserving purchasing power, all while keeping it readily available for bigger opportunities, acts of generosity, or unforeseen needs. It's a powerful step towards building a truly resilient and biblically aligned financial foundation. Part 6, Real-Life Returns, Watching Your Money Work Monthly. We've explored how ETFs simplify access to ultra-safe T-bills, transforming complex government securities into an easily managed investment. Now, let's bring this concept to life with a practical example, allowing us to truly visualize what it means to watch your money work, month after month. This isn't just theory, it's about seeing tangible, real-life returns on your diligent stewardship. Imagine you followed our guidance and decided to allocate a portion of your emergency fund or short-term savings, say, $1,000, into a T-bill ETF like SGOV. Let's assume, for the sake of this illustration, that SGOV is currently yielding an annualized return of 4.8%. This is a very conservative and realistic figure in our current economic environment. What would this mean for your $1,000? By simple calculation, 4.8% of $1,000 is $48 per year. Divided by 12 months, this translates to $4 of income every single month. For every $1,000 you place in this ETF, you could expect to see approximately $4 deposited into your account each month as a dividend. This might seem like a small amount initially, but it is a consistent, reliable stream of income generated from money that would otherwise be silently eroding in a typical savings account. This tangible, consistent return brings to mind Jesus' powerful directive in Luke chapter 19, verse 13, from the parable of the minas. "Put this money to work," he said, "until I come back." Other translations render this as, "Do business till I come." This isn't a passive suggestion, it's an active command for stewardship. Jesus expects us to engage proactively with the resources he entrusts to us, to do business with them, to ensure they are productive. Investing in a T-bill ETF is precisely this, putting your money to work in a safe, disciplined manner, fulfilling the Lord's expectation for active, engaged stewardship, even with your most liquid assets. This process operates on a cycle of monthly dividend payouts and subtle price adjustments. When a T-bill ETF distributes its monthly dividend, its share price will typically adjust downwards by a similar amount. This is not a loss, it's simply the mechanism by which the income is distributed. The overall value of your investment, including the cash dividend you receive, remains intact and often grows. You can think of this like a farmer harvesting a crop and then having the option to replant the seeds for the next season. Proverbs chapter 12, verse 11, reminds us, "Whoever works their land will have plenty of food, but whoever chases fantasies has no sense." The diligent steward is like the one who works their land, planting and replanting, allowing the fruits of their labor to multiply. When you receive that monthly dividend, you have effectively harvested a portion of your money's labor. You can then choose to spend it, or, for even greater growth, you can choose to reinvest it, effectively replanting the seeds and allowing the power of compounding to accelerate your wealth accumulation. This strategy allows your money to grow actively while it's waiting for larger, more significant goals. Perhaps you're saving for a down payment on a house, preparing for a substantial purchase, or simply holding cash on the sidelines, waiting for opportune moments to invest in the broader market during a dip. Instead of that money sitting idly, losing purchasing power to inflation, it is actively generating income. It acts as a productive holding tank, a secure repository that is simultaneously a growth engine. Furthermore, T-bill ETFs offer invaluable flexibility. Unlike certificates of deposit, CDs, that often impose penalties for early withdrawals, you can sell your shares in an ETF like SGOV at any time during market hours, accessing your principal without penalty. This shifts our mindset from passive waiting to active growth, a principle reinforced in Proverbs chapter 21, verse 20, "In the house of the wise are stores of choice food and oil, but a foolish man devours all he has." The wise steward builds stores, allowing resources to accumulate and be ready for future needs and opportunities. By embracing safe, accessible, and productive investment vehicles like T-bill ETFs, we are actively fulfilling our call to steward God's resources with wisdom and diligence, watching our money work, month by month, for His glory and our good. Part 7, the pros, safety, liquidity, and superior returns. Now that we have practically illustrated how a T-bill ETF can generate steady monthly income from even a modest sum, it's crucial to synthesize the profound advantages of this strategy for the diligent steward. These aren't just minor benefits, they represent a fundamental shift in how we approach liquid cash management, aligning it more closely with principles of biblical wisdom and prudence. We will focus on three primary advantages: unparalleled safety, exceptional liquidity, and significantly superior returns, along with some additional powerful benefits. Firstly, let's consider safety. The cornerstone of this strategy is the investment in short-term US Treasury securities, which, as we've noted, are directly backed by the full faith and credit of the United States government. This makes their default risk virtually zero, a claim few other investments can genuinely make. When you lend money to the US government, you are entrusting it to an entity with the power to tax and, if necessary, print its own currency to meet its obligations. This is why US Treasuries are universally regarded as among the safest investments in the world. For the Christian steward, this level of security resonates deeply with the wisdom found in Proverbs chapter 27, verse 12, "The prudent see danger and take refuge, but the simple keep going and pay the penalty." In a world filled with financial uncertainties and risks, choosing to take refuge in an investment vehicle that prioritizes the preservation of capital is a hallmark of prudence. It means we are not recklessly exposing God's entrusted resources to unnecessary hazards but are thoughtfully safeguarding them. Secondly, we have liquidity. Unlike traditional certificates of deposit, CDs, which lock your money away for a fixed term and often impose significant penalties for early withdrawal, T-bill ETFs offer instant access to your funds during market hours. This means that if an unexpected emergency arises, or a truly providential opportunity presents itself, you can sell your shares in the ETF and have the cash available within a couple of business days, without incurring any penalties. This agility is a tremendous asset for effective stewardship. It ensures that your resources are not only protected but also readily available to respond to the leading of the Holy Spirit, whether for acts of generosity, urgent family needs, or strategic investments that align with your long-term goals. Your reserve is not dormant, it is a dynamic resource, always prepared. Thirdly, and perhaps most compellingly for many, is the prospect of higher yield. As we've discussed, T-bill yields, particularly in a rising interest rate environment, often exceed 4% and sometimes even higher. This figure significantly outperforms the paltry interest rates offered by most traditional savings accounts, which frequently languish below 1%. This difference, though it might seem small on a per-dollar basis, compounds powerfully over time, leading to a substantial impact on your overall financial health. This consistent, higher return is a direct result of diligent financial management, echoing the wisdom of Proverbs chapter 10, verse 4, "Lazy hands make for poverty, but diligent hands bring wealth." By actively choosing a vehicle that allows your money to earn a competitive return, you are demonstrating diligence in your stewardship, ensuring that your wealth is actively growing rather than slowly eroding. Beyond these three pillars, there are additional benefits that further enhance the appeal of this strategy. The monthly income stream provided by T-bill ETFs is incredibly beneficial. For those on a fixed income or seeking to supplement their cash flow, consistent monthly dividends can be integrated into budgeting plans. For those focused on long-term growth, the option to automatically reinvest these monthly dividends harnesses the power of compounding, allowing your initial investment to grow exponentially over time without further manual effort. Finally, a notable advantage is the tax exemption from state and local income taxes. While the interest earned on US Treasuries is subject to federal income tax, it is exempt from state and local income taxes. Depending on your state's tax rates, this can represent a significant boost to your net return, making the after-tax yield even more attractive. This is another layer of efficiency and intelligent management, reinforcing the alignment of this strategy with biblical stewardship, making the most of every resource and opportunity with wisdom and foresight. By embracing these safe, liquid, and high-yielding T-bill ETFs, we transform our liquid cash from a vulnerable, eroding asset into a dynamic, productive force, ready to serve God's purposes in our lives and the world. While the advantages of utilizing T-bill ETFs for managing your liquid cash are substantial and transformative for diligent stewardship, it is equally crucial to adopt a balanced and realistic perspective. No financial instrument is a panacea, and true wisdom lies in understanding not only the strengths but also the limitations of any strategy. Therefore, as responsible stewards, we must also examine the cons, or the important considerations to effectively manage our expectations. Firstly, and perhaps most importantly, this is not a get-rich plan. If your expectation is to multiply your wealth exponentially or to achieve financial independence in a short period through T-bill ETFs, you will be disappointed. The returns, while superior to traditional savings accounts, are inherently modest. They are designed for capital preservation and stable income, not aggressive growth. This truth aligns with the timeless wisdom found in Proverbs chapter 28, verse 20, which states, "A faithful person will be richly blessed, but one eager to get rich will not go unpunished." God calls us to faithfulness and patience in our financial dealings, not to a pursuit of rapid, unearned wealth. This strategy is about steady, consistent, and prudent growth, cultivating good habits of stewardship, rather than seeking speculative windfalls. Realistic expectations are paramount to avoiding frustration and maintaining a biblical perspective on wealth. Secondly, it's vital to understand that yields fluctuate. The attractive yields we've discussed, often exceeding 4%, are not fixed or guaranteed perpetually. They are intrinsically tied to the prevailing interest rate set by the Federal Reserve and broader market conditions. When the Federal Reserve decides to lower interest rates, as it has done historically and will likely do again in the future, the yields offered by new T-bills and, consequently, by T-bill ETFs will also decline. This means your monthly income stream is not fixed but will adjust over time. This dynamic nature is part of the financial landscape, reminding us of the transient nature of all earthly endeavors, as Ecclesiastes chapter 11, verse 6, advises, "Sow your seed in the morning, and at evening let your hands not be idle, for you do not know which will succeed, whether this or that, or whether both will do equally well." While this verse speaks to sowing efforts, it subtly reminds us that outcomes can vary, requiring our continued diligence and adaptability. We must be prepared for periods where these instruments may offer lower, though still safe, returns. Thirdly, this strategy requires you to have a brokerage account. For those who are new to investing, opening a brokerage account might initially seem like a barrier. While setting up an account with a reputable online broker is generally straightforward and can often be done entirely online in a matter of minutes, it does represent an additional step beyond simply opening a bank savings account. However, modern brokerage platforms have significantly simplified the process, offering user-friendly interfaces and ample educational resources to guide beginners. Consider this initial step as an investment in your financial literacy and expanded stewardship capabilities. Fourthly, there is a small ETF management fee. While generally very low, for example, a widely used T-bill ETF like SGOV might have an annual expense ratio of around 0.09%, it is still a cost that slightly reduces your net returns. This means that for every $10,000 invested, you might pay about $9 per year in management fees. While minimal, it's important to be aware of all costs, however small. This echoes Jesus' wisdom in Luke chapter 14, verse 28, regarding counting the cost before embarking on a task. Suppose one of you wants to build a tower. Won't you first sit down and estimate the cost to see if you have enough money to complete it? Even small fees should be acknowledged as part of our diligent financial planning. Finally, it is critical to understand that T-bill ETFs are not a long-term growth vehicle in the same way that diversified stock market investments are. Their primary purpose is capital preservation and short-term income generation. The share price of a T-bill ETF is designed to remain relatively stable, reflecting the value of the underlying T-bills, which mature at par value. You won't see the kind of significant capital appreciation over decades that you might expect from growth stocks or broad market index funds. Therefore, while excellent for managing your liquid cash and short-term savings, these ETFs are not intended to be the primary engine for building wealth over periods of 20, 30, or 40 years. They are a foundational layer, a secure and productive holding zone, best utilized for funds earmarked for near-term goals, emergency reserves, or simply as a strategic parking spot while awaiting other, longer-term investment opportunities. By understanding these limitations alongside the profound benefits, we can approach this strategy with clarity, wisdom, and a truly balanced perspective, aligning our financial actions with God's call for discerning and faithful stewardship. Part 9, Kingdom Alignment, How This Practice Honors God's Vision for Money. Having explored both the profound advantages and the necessary limitations of using T-bill ETFs for our liquid cash management, we now arrive at the most crucial consideration: how does this practical financial strategy align with God's overarching vision for money and our role as stewards in His kingdom? Beyond the mechanics of yields and liquidity, our ultimate aim is always to honor God with all that He has entrusted to us, viewing every resource through a lens of divine purpose, rather than mere accumulation. At the heart of this discussion is the profound lesson from Jesus' parable of the talents, found in Matthew chapter 25, verses 14 through 30. In this parable, a master entrusts different sums of money, talents, to 3 servants before going on a journey. The first 2 servants diligently invest their talents, doubling them, and are commended as good and faithful servants. However, the third servant, out of fear, simply buries his talent, returning only what he received. He is severely rebuked and labeled as wicked and lazy. This parable is not just about financial acumen, it's a powerful indictment against idleness and fear-driven inaction. When we utilize interest-bearing instruments like T-bill ETFs, even for our most liquid assets, we are embodying the spirit of the first two servants. We are ensuring that the resources God has placed in our care are not lying dormant, but are actively producing fruit, even while we await bigger missions or clearer directives for their deployment. This is faithful stewardship in action, allowing our money to work, to grow, and to be ready for its ultimate purpose, whatever that may be. This practice also emphasizes preparation for the future, a principle frequently echoed in Scripture. Proverbs chapter 6, verses 6 through 8, instructs us, "Go to the ant, you sluggard, consider its ways and be wise. It has no commander, no overseer or ruler, yet it stores its provisions in summer and gathers its food at harvest." The ant, through diligent preparation, ensures its survival during lean times. Similarly, by prudently investing our short-term cash in safe, productive vehicles, we are preparing for future needs, opportunities, and even unexpected challenges. We are building a reliable foundation, ensuring that our stores are not only preserved but are steadily increasing. This preparation, coupled with patience, akin to the farmer described in James chapter 5, verse 7, see how the farmer waits for the land to yield its valuable crop, patiently waiting for the autumn and spring rains, allows us to cultivate a posture of patient yet proactive stewardship. We are waiting well, allowing our resources to grow while we discern God's timing and direction. Indeed, we can liken this approach to keeping the soil fertile. When you have money sitting in an account that yields next to nothing, it's like having rich soil that is left untended, exposed to the elements, and slowly losing its vitality. But by placing that money in a T-bill ETF, you are actively tending that soil, enriching it, ensuring it remains fertile and ready to produce a harvest whenever the right seeds, new investments, mission opportunities, acts of generosity, are to be planted. Your capital is not just preserved, it is primed for action. This confident, proactive management starkly contrasts with the fear-driven act of burying money, whether literally or figuratively, by allowing it to simply languish. Burying money stems from a lack of trust, either a lack of trust in the master, as in the parable, or a lack of trust in God's ongoing provision and guidance. Our financial decisions should always reflect our deep trust in God's sovereignty and His unwavering provision. When we diligently manage our resources, even in seemingly small ways, we are expressing our faith that God will honor our efforts and multiply our endeavors. We are not burying our talents out of fear of loss, but actively deploying them, confident in His ultimate oversight. Ultimately, this strategy shifts our focus from passive saving to intentional, purposeful stewardship. It transforms our cash from a static quantity into a dynamic tool, constantly working, ready to be deployed for God's glory. It teaches us discipline, patience, and a proactive approach to all that God has entrusted to us. By engaging our resources in this way, we are not merely managing finances, we are actively participating in God's kingdom vision for money, a vision where every penny has a purpose, every resource is maximized, and every act of stewardship brings honor to our Heavenly Father. This is how we allow our liquid wealth to truly align with the kingdom, becoming a wellspring of blessing rather than an idle pond. Part 10, Your Call to Action. Start multiplying God's provision today. We've meticulously laid out how leveraging safe, liquid, and high-yielding T-bill ETFs aligns perfectly with God's vision for intentional stewardship, transforming our passive cash into productive assets for His glory. We've explored the unparalleled safety, the ready liquidity, and the superior returns that these instruments offer, alongside a balanced understanding of their limitations. We've seen how this practice reflects the wise counsel of Scripture, from the diligent ant to the faithful steward. But understanding, my friends, is only the first step. The true test of our faith and commitment lies not in intellectual assent, but in concrete action. The Apostle James reminds us in his powerful epistle, in chapter 2, verse 17, that faith by itself, if it is not accompanied by action, is dead. This profound truth applies not only to our spiritual walk and our confession of belief, but it powerfully extends to our financial stewardship as well. It's one thing to intellectually grasp the principles of diligent money management, to understand how to multiply what God has provided, or to recognize opportunities for prudent financial action. It is an entirely different, and ultimately more impactful, thing to put those principles into practice, to translate belief into behavior. For far too long, many of us, perhaps unknowingly, have allowed a significant portion of God's provision in our lives, our emergency funds, our short-term savings, the cash we're holding for future opportunities, to sit idly in traditional savings accounts. There, it slowly erodes under the relentless pressure of inflation, barely earning a fraction of a % in interest. This, waiting money, is not merely waiting, it is stagnating. It is like water in a still pool, gathering no momentum, producing no life, and slowly diminishing in value. This inertia, whether born of fear, ignorance, or simple procrastination, sadly mirrors the behavior of the third servant in the parable of the talents, who buried his master's money, allowing fear or inaction to prevent the very multiplication God expects from his stewards. Today, I issue a direct and earnest challenge to you, the faithful stewards who comprise our community here at The Word on Wealth. Transform this waiting money into a productive asset. Embrace the simplicity, security, and consistent income that T-bill ETFs offer. Allow your dollars, however modest or substantial, to begin actively generating income, to build a more resilient foundation for your household, and to be ready for the divine purposes God has for them. This is not about chasing risky gains, it's about responsible, prudent management of what has already been entrusted to you. I invite you to pause and reflect for a moment. Consider the opportunities you may have inadvertently missed, or the purchasing power you've silently forfeited, simply because your hard-earned savings were not actively working for you. Imagine the extra income that could have eased a burden, the additional resources that could have funded an act of charity, or the accelerated progress towards a significant financial goal, if your cash had been earning 4 to 5% or even more for the past year or two, instead of a negligible fraction of 1%. This is not to dwell in regret, but to awaken to the potential that lies before you right now. The journey of 1,000 miles, as the old adage goes, truly begins with a single step. For some, that first step might simply be researching SGOV or other similar T-bill ETFs, understanding their specifics. For others, it might be the step of opening a brokerage account, overcoming that initial hurdle. For many, it will be the decisive act of moving those first few $100 or $1,000 from a low-yield savings account into one of these safe, efficient, and productive vehicles. Do not delay. Do not allow inertia, or the perceived complexity of investing, to paralyze your good intentions and prevent you from acting on wisdom. Begin today to multiply what God has given you, no matter how small you believe it to be. To solidify your commitment and to inspire and encourage others in this journey of intentional stewardship, I invite you to make a public declaration. In the comments section below, share your resolve and commitment by simply typing, "I choose to multiply what God has given me." Let us build a vibrant community of faithful stewards who are actively honoring God with every facet of their financial lives, inspiring one another to greater diligence and purpose. Finally, if this teaching from The Word on Wealth has blessed you, if it has equipped you with new tools, illuminated new paths, and renewed your commitment to biblical stewardship, I humbly ask for your support. Your contributions are vital. They enable this ministry to continue producing these in-depth, biblically grounded teachings, reaching more individuals who desire to honor God with their finances and live out His principles in the marketplace. Please consider supporting our ministry through the link provided in the description below. And if you haven't already, take a moment now to subscribe to our channel and enable notifications, so you never miss another episode of practical, God-honoring financial wisdom. Until next time, may God bless your diligent efforts as you seek to be a wise and faithful steward of all that He has entrusted to your care.